in general, looking in New Jersey at what constitutes the retail market in New Jersey, about a little over 190 million square feet of retail GLA in New Jersey, nearly 2,500 properties, and about 370,000 jobs generated from that industry. Big retail sales, and a big contribution to the New Jersey economy in terms of sales tax. So we see that as really an important function of the economy here in New Jersey, and also an indicator of how the economy is doing in terms of retail sales, which are watched very closely. Primarily, the key investors are really looking for grocery-anchored shopping centers and looking for safety. Those centers are the everyday needs, or serving the everyday needs of shoppers, and are more stable in terms of asset class, probably also less vulnerable over the long term to the growth in online retail sales. Kind of the pool of retailers is getting smaller in the market, and at least now more are expanding, but they're still being more cautious in number of stores that they're looking for. Although demand is strengthened, and quite frankly, we're doing a lot of leases now, you kind of sometimes feel like you're filling a bucket a little bit with a hole in it because somebody else is having an issue. There's been very little new construction, adding new supply to the market that has been helpful in terms of keeping vacancy rates down. New retail construction basically stopped when the economy hit the market, except for some projects that were in the works or was delayed. One thing that we're seeing on rents, and it just might be interesting to note, is taxes. In a triple net lease with base rent, maintenance, and taxes, the tax component over the last number of years has really increased, and that's pushing that component where maybe maintenance, taxes, and insurance were in the $5 range altogether. We're seeing more and more $8, $9. These days, it used to be always trying to drive rents higher and so forth. Now it's a little bit more of a game of maintaining occupancy and keeping that occupancy as high as you can, and working with tenants a little bit more. The stabilization of rents will continue. Over the last number of years, we've gone through some periods where we've seen really high numbers of rent reduction requests from tenants, starting with old national tenants trying to go out and just grab as many as they can. That has abated, and then kind of working on a case-by-case basis with some local and regional retailers, but the pressure to reduce existing rents has really abated, and I think that will continue as well. And then probably see some more bankruptcies, but hopefully not the numbers that we've seen over time. Because those stores coming back onto the market, it's a bit of a double whammy. You're losing a retailer that was looking for stores, you're putting space back into the market, and then the absorption of that space is really taking quite a bit of time. In prior bankruptcies, there was much more demand from retailers, and that space was absorbed more quickly. So we don't expect to see really any major bankruptcies, knock on wood, coming up this year. And then the other thing that impacts our industry is online sales, and that's projected to continue. That's about 7% last year of total retail sales, and that's projected to continue to increase, although gradually, up to about 9% over the next 5 years.